Traders have been piling into small caps and dumping big tech, at least over the last couple of trading days. The Russell 2000 climbing higher once again this morning. You're looking at a gain of just about 5% since the start of the week. Now that move higher coming on the heels of Thursday's CPI data that showed signs of cooling inflation, and that really sparked a rotation in some of the laggards that we have seen since the start of the year. And as a result, we saw a number of larger cap tech companies under pressure. This rotation into small caps, and really the theory behind it, Brad, is because of what we just said about cooling inflation. Now, we have been waiting for this more of a broadening within market participation. This rotation into small caps, similar to the moves that we saw towards the end of last year, when there was lots of optimism that the Fed was going to issue its first rate cut. So here we are in the back half of 2024, and now it seems like the narrative is starting to shift just a bit when you couple some of Powell's recent commentary about the progress that we have made on inflation and square that with at least that CPI print that we got yesterday. PPI maybe pouring a bit of cold water on some of that progress. We'll see how that all shakes out in the PCE report that we will be getting soon. But again, that progress on inflation, enough here for the street to get even more optimistic about rate cuts, and we're starting to see a bit of a rotation. Now we'll see whether or not we'll see a bit more of momentum within some of those smaller cap names, because as you can see, even if you take a look more of that year-to-date performance, Russell 2000 still significantly lagging the S&P 500. So you could make the case that maybe we are setting up here to see more of a catch-up trade happen in the next couple of months.
Yeah, in terms of the commentary of the past 5 days, I think back to our conversation with Liz Ann Saunders from Charles Schwab, who was talking about some of the quality bias that still exists in terms of what's working and what's not, and doing profitability ranges even on some of these small cap names. And that's particularly acute within the Russell 2000, where the profitable stocks have done very well. Low interest coverage stocks have not kind of maintained these strong balance sheet. So ultimately, the profitable stocks doing well over the past year, the unprofitable stocks doing quite poorly, and really the differentiation between those. And she was saying, look at it in terms of interest coverage. High interest coverage stocks done very well. Low interest coverage stocks have not had strong balance sheet companies versus those weak balance sheet companies, and the big performance spread that she had been tracking there, which really kind of gives us a little bit more color about what's performing well within the small and mid cap space right now.